Not following your plan in trading is probably one of the most common problems I hear, especially with all newer traders. Every new trader is always told, hey, you didn't follow your plan, you're not disciplined, and that's why you're not profitable. So I thought it'd be a great conversation to talk about what elements go into of why you didn't follow your plan, and sometimes why it's actually not your fault. So I guess, Pedma, do you want to start with your particular points?
Yeah, sure. So, as systematic traders, we have very different definitions of following your plan versus discretionary traders. But if you have a plan or a system that you follow and you cannot follow it, there's usually a few, in my opinion, at least when I did that, there's a few psychological barriers or whatever you want to call it that is stopping you from doing it. And I think that's a lack of conviction because you don't either have enough data, you haven't tested enough that type of trades, you're letting other people influence your decision, people perhaps that you look up to. For example, I remember back in the day when I was in a trade and I saw someone I looked up to, he was long and I was short or vice versa, and that would have an effect on me even though I didn't let it affect my positioning. But I know that it was kind of weird. The people that you admired be in a different position than you are. Who are you, right? You are just starting out your trading career. So all of that stuff, and usually it stems from a lack of conviction that comes with age and with getting results over the years, in my opinion. So you can approach it two ways, or at least the way that I've done it is you take loads of data to whatever you are trying to do, and you see there's some positive expectancy in what you're trying to trade, or you just gain conviction over the years and you start developing your own book of plays and you start understanding what works and what doesn't. And after 1 year or 2 years or 100 or 500 trades, you start to understand that no, this is a good trade and it's my responsibility. And if I allow others or a lack of confidence to interfere in it, I'm adding a lot of randomness to my own trading, and we don't want that as traders.
Yeah, I think you kind of summed it up perfectly. I think the only two things I would add, which is similar to what you said, was it normally comes down to like it's all about taking actions with uncertainty. And when you have uncertainty, it means that it's very easy for you to flip flop between decisions. Maybe at one point you're very confident with a trade, and then at another point you hear someone else, as you were mentioning, say something else, or you see something on the chart, etc., whatever, and then you suddenly have a question or a doubt. Are you still in this trade? Should you close it? Should you move your stop loss, etc., all those sort of things. And most of that can be fixed if you just have blind conviction. Now, obviously, you don't want blind conviction on an over leveraged position or anything like that. But normally, where conviction can come from, at least for me, is through data. So I have to have a lot of conviction either in the model that I'm trading or in the thesis that I'm trading. So I could probably give an example for both. So like a model version would be my automated future strategies. I have plenty of data on them. I have plenty of samples. I've done tons of different backtesting tests, and I also have live results on them. So I have very high conviction in them. I also have conviction in their logic. I know what they're kind of based on. I know what they're exploiting. Well, it's just very simple, like risk premiums. And I know there's a lot of other people doing the same sort of thing and also seeing success. So like there's a lot of conviction on that side. So if I go in a drawdown or anything like that, most of the time I'm pretty convicted. The other side is if I had like a thesis, for example, with Hyperliquid. When we both took that trade, we worked out a fair value, what we thought would be fair for Hyperliquid at that particular time with that current data. And that seemed incredibly reasonable. We created, overestimates, underestimates, etc. And we consistently thought it was underpriced, and that's why we took that trade. So that was more of an example of a discretionary trade, but there was so much conviction there. I don't think I really doubted that trade for maybe the first couple of weeks. And then we had new data, and then we reassessed, et cetera, all those sort of things. And that's where the part of having, other data come in can be useful. You don't always want to be siloed off. It depends, actually. Let me clean that up a bit. I think the better way to say it is that if you're trading discretionary, you'll probably have to let in some other data to influence some of your decisions. Because most of the time, you're making decisions based on recent data. So whether that be particular news story, things like that. Whereas in systematic trading, most of the time, your conviction is coming from lots of samples of historical data most of the time. So you can kind of more silo off your decisions and only focus on what data you have and not let anyone else influence them. Do you think I kind of summed that up correctly, Padma, or what do you think?
Yeah, I do. I think you make a very good point in terms of as information like flows, you also flow with it. Like markets are dynamic and things are always changing, and having a plan is not, oh, I'm going to risk 1 hour to make 3 hour. That's not a plan. Yeah, I'm not going to use bad words, but that's not a real plan. Okay, the market doesn't owe you a 3 hour trade or whatever. Like a plan is something that you understand why you are entering a trade, why are you positioned, how much you are positioned right now reflects your confidence in your trade, stuff like that, and where you are going to exit and why. And for example, let's say that you have that hyperliquid example that we traded, and you have a thesis of what the pricing of that asset should be. However, if things change, let's say it got hacked, or the other way, that it got like much more traction that what you anticipated before, now your plan should change also with that idea, because things have changed, and keeping very strict objectives, whatever those are, I think is not the most efficient way to trade. For example, I'll give you a very a very practical example. For example, a trend following model. When you are trading trends, the more modern CTAs these days, what they do is that they adjust their positioning as the market changes. So, for example, if you get in like whatever $100 today, but your confidence is 2 times more a week from now, you adjust your positioning so that it reflects that confidence in your market, in the current market, given the current variables that the market is providing you with. So your confidence, your positioning is always shifting with that confidence shift as well. So plans are good, but planning too strictly can be bad, because markets don't care about your plans.
Yeah, I think it's primarily on the discretionary side, right? Not so much for
Exactly.
systematic. Yeah.
Even systematic, like if people make a system, oh, I enter here and I want a 3 hour trade or whatever, like why why is the 3 hour or whatever price target you've just used relevant to your trade? What are you trying to capture? Are you trying to capture something that needs to converge or something that diverges? What are you trying to harvest risk premium? Like there's a bunch of questions that you have to make, and normal retail trading like ideas are very bad, and that's why most of the people that try trading fail anyways. So
Yeah, no, I agree. I think this kind of leads into one topic we were previously discussing before the podcast, which was that in systematic trading, there's not that much to talk about, at least on a daily basis. Like we were discussing how, we obviously were on Twitter a decent amount. We look at other traders. I follow both discretionary and both systematic traders. And it is always engaging that a discretionary trader can always have a comment on the most recent news, on the most recent geopolitical thing, and things like that. Whereas when I was discussing with Pedma, like this whole Israeli and Iran things, we can do our own speculations. We can maybe take a longer term position, maybe a SPY position or BTC, etc. But we're not going to be changing any of our models because Iran bombed Israel the other way around, etc. Like that doesn't necessarily influence any of our daily execution or decisions. Maybe it'll affect some of our risk if if markets are really increased in volatility, but that's probably the only part of it that would, especially for me on futures. I haven't changed anything at all, and all I really expect now is probably for this next week, maybe two, there's going to be more volatility, so maybe I'll have to take on a bit less risk or adjust some position sizes, but that's about it. What do you think?
yeah, for sure. It's like even with family, like when people ask me and friends ask me what do I do, and they want to see and stuff like that, like it's pretty boring. I don't have anything to show you. Just numbers. I'm not here taking positions like you see in the movies. Oh, I took a $10 million position today. I'm betting on the housing market crash. It's not like that. We don't trade like that. Sometimes we do, but it it's most of the time we're just taking systematic trades with very strict rules and letting the models ride over the years. And that's basically, it's a pretty boring job. And sometimes you have comments, sometimes you don't. It should be, in my opinion, trading should be a boring job.
Yeah, like I have the same thing with my family. My mother is always, sending me a message about recent news and saying, is that going to affect
Are
my
you
market
okay?
returns and things? Yeah, or am I okay? That sort of stuff. 100%. I get that a lot, and it's always funny trying to tell her that, like, I don't know. I'm not a professional, economist or anything like that. It doesn't really affect anything I do.
Yes. we've lost pretty good sums of money in a single day and made as well. And at least if I ask any of my friends or family if they noticed it, and if I told them the amounts, they wouldn't even know. They wouldn't believe it because it doesn't change me. If it was my mistake, I would be pretty pissed about it, to be honest. But when it's just systematic loss, and we talked about this last week, the systematic loss versus discretionary. If it's just a part of the system, I don't care. It's the game I signed up for.
Yeah, 100%. I guess do you want to talk about the outlook for crypto markets?
Yeah, for sure. So one of the things that you see people right now during the summer and heading into the summer is people start talking about the bear market, and here's a bear market coming and stuff like that. And my outlook is much more positive, and it's not because I have big bags. I don't care. Like if it wasn't, I would be selling everything. And yeah, you have nothing. And this is just my ideas. Again, we are not macro experts here. It's just whatever I'm trading. It is real time. I'm just my thoughts. You have nothing like everything bad that is happening, like from the tariffs that Trump announced, from inflation, from war. All of things is hitting the market right now. The past couple of the past 2 quarters, right? Everything bad that should affect the market in a big way, and crypto especially, is hitting the market every day. And crypto barely moves. Like, okay, altcoins take a hit, and you can see that they are down a lot, but it's nothing major. It's just normal movements in the market. And how can you be like negative about that into the future? Are you expecting worse than a war in the Middle East? Are you expecting worse than America bombing Iran and stuff like that, and the tensions there? Well, if you are, maybe you should be more negative towards the market, but I'm not. And I think that after the summer is ended into late 2025, into 2026, especially into late 2026 with the midterms, there's a lot of incentives for the markets, at least for governments to do their best to pump the markets, basically, because you have all the incentives towards that. And I don't see how you can be a bear at these price levels. At least that's my opinion. And I wouldn't bet. I wouldn't take a short here. I'll be accumulating into 2026 and maybe sell into the sunset, by 2026 or whatever. That's my view on the market. What do you think, Munir?
I love it less experienced than you on crypto, but I think yes, I think long term, if you're trying to take long term positions, I think that's probably the more correct thing to do. I might be doing some like range trading. If someone's gonna be a bit boring and we're gonna get some like volatility here and there, I might do some range trading, but that's probably about it. And then otherwise, yeah, I'll probably accumulate some BTC, probably hype. That would probably be the main assets. Yeah, maybe ETH if I'm confident in ETH. I still don't like ETH that much as a product, but I know it's obviously one of the big part of the free, so maybe I'll accumulate some of that as well.
Yeah, for sure. Like just as a macro comment, I don't see like I can. Yeah, there's black swans always, of course, but I just there's too many incentives for things to go right into 2026, and that's my bet. That's been my bet since the beginning of the year, and we've made a lot of money because of that. So yeah, let's see. I'll be here trading both ways, either way it goes, but that's my outlook for crypto right now.
Perfect. I don't think I do. You have any outlook for SPY? Because at least for me, with the whole Iran and Israeli thing, actually, I'll put a small comment about this because I just think it's funny. Is that on Twitter? If any of viewers are also like avid, I guess, Twitter followers of people, you'll see people switch between becoming an economist, between being an expert on tariffs, all these things, etc. And I try and stay away from most of my opinions on those, just because I really don't know enough of information. I just stick to the systems. But at least for SPY, I'll just still be accumulating on any of these dips. I'm just like still buying pretty much, just long-term holds.
Yeah, exactly. Same here. Like I don't want to be commenting. Like I said here, it's just my own personal ideas, but I prefer to be a buyer of SPY for the long term than a seller. And
yeah, for sure.
That's it. Let's go through like the market momentum as a trend signal, perhaps.
Sure. Let's do it.
So last week we were discussing on Twitter about using market momentum as a trend signal. For example, you rank, let's say, a basket of stocks or a basket of cryptos, and you use the momentum of that basket as your own like indicator for your own models. Like there's two there's two ways to think about it, and I don't want to say that one is wrong or the other is right. I just say that there's different approaches. Like, okay, let's say that you are trading just equities, and sure that everything is mostly correlated. Maybe it's a benign thing to take a composite signal of all the other stocks in your basket, and if momentum is strong on those, you activate or you use that to infer your positioning, because it's like saying, okay, everything is correlated. If everything is going up or everything is going down, if momentum is strong, you also want to be trading momentum systems there. The only thing is, I don't like confirmations in trend models. Also, if I'm going to trade out, there's two ways to define. I don't like confirmations in trend or momentum models. I like to trade things whatever it's there, because you'll lose a ton of upside potential by waiting on confirmations. And my opinion is that you are paid to take risk. And if you are putting like confirmations on everything, you're just adding overfitting risk. And I prefer to keep everything as simple as possible. And the other side is, okay, let's say that I'm going to trade whatever commodities, or I'm going to trade crypto. That signal won't be able to be used there, right? So now you have to deactivate the signal to one asset class and activate to the other asset class. And I think it's a bit messy. And I prefer to keep things very simplistic, and that I can just take it and apply it everywhere, if that makes sense. That would be my main two arguments against it, even though I don't think it's completely wrong.
To be clear, what would you kind of clarify as confirmation?
Yeah, for example, a confirmation saying, oh, today, let's use this example. For example, you have a basket of equities and you are measuring momentum on that basket. And let's say that, oh, if momentum is above a certain threshold, okay, that's a signal, you know? I don't like that.
So you'll always just be entering and Xing based on like, like, I don't know, moving average crossover being above X, EMA, etc.
Yeah, just based on the pure momentum signal. If I want to edge against that, I can put some other system on top of that with the different skew distribution and hedge for bad times during there. But I think that adding filters on top of filters is a very slippery slope.
Do you know what's your kind of average hold time?
Over a month.
Okay, that makes sense. I was expecting it to be quite long. That's fair. I think for me, because a lot of mine on futures are intraday, I'll sometimes have some confirmation, but I do try and limit it as much as possible. I'm not going to have it too much on either side.
Yeah, because man, I have this. I might be like stubborn about it, but I have this idea that you are paid to take risk. The more you eliminate that risk, that you try to take it away, you are never taking risk away. You are just hiding it under a rug, and you cannot see what's under the rug most of the times. And I like to keep my risk very clear, like very in front of me. And if I don't I'm just not as confident in my system anymore.
No, it makes sense. I think that kind of like perfectly sums